How to purchase a home with a 1% down payment. So what we have is a down payment assistance program that is conventional financing. Actually, it's not really a down payment assistance program, but there is a conventional financing with 3% down as a down payment. What's going to be required of the borrower is for them to bring 1%, because if they qualify, there's a 2% grant that is given to the borrower and is forgiven. Now, what happens is we put in the 2%, the borrower brings the 1% and the closing costs. It is conventional financing, a minimum credit score of 620. You must be within 80% of the area median income. The area median income is the income bracket that you would be in based off your location. I can help you in 46 states. This program is available in 50 states. So definitely reach out to me at the end if you want to see if you qualify for this program. Now, there are some parameters. The parameters for this program is, of course, 620 credit score. Like we mentioned, the property cannot be over $350,000 in sales price, as well as it has to be a single family property. It cannot be a duplex or triplex. It cannot be a manufactured house. It must be a stick-built home or a modular home in order to qualify. You do not have to be a first-time home buyer to qualify for this program. And again, it is good in 50 states. I can help you in 46 states. So let's talk about the conventional financing piece. So with the conventional financing piece, you qualify and you have to have sufficient credit. You've got to have a good credit profile. Conventional financing is conservative. However, if you fit into that mold and you fit into that bracket, if you fit into that mold and you fit into that bracket, then this is a potentially great program for you. Who it's not great for is somebody who's in a high price area, such as maybe New York or California, in one of those areas. But again, if you qualify, it's a great program. You bring 1%, we contribute the 2% to the other portion of your down payment. The other great point is there is no PMI, private mortgage insurance. A lot of time when I speak with buyers, they are concerned with how do I get rid of PMI. This program has no PMI, which is no private mortgage insurance. So what that means to you is because there is no private mortgage insurance, and I'm just going to be honest with you, typically the interest rate is going to be on the higher side. However, you don't have to have the higher interest rate for the life of the loan. So what I would do potentially is if the interest rate is, let's say, 8.125%, it gets you into a house, I would refinance after 7 months and then go in and get a lower rate because that grant is forgiven. So you could potentially do a rate and term. You could potentially do a rate and term refinance to get the lower interest rate, and you don't have to pay that grant back. A lot of times the state housing bonds or the federal state housing bonds or national down payment assistance, you have to stay in that house or you can't refinance or sell it for 5, 10, 3 years, right? It varies depending on the product. This particular product will allow for you after 7 months, meaning 6 on-time payments, you have the ability to refinance out of that to get the lower interest rate. Now, caveat, if you refinance out of that program, what you want to do is make sure you compare apples to apples, right? So right now, if you qualify for the program, you put down 1%, there's no mortgage insurance, you want to look at your payment, right? When you go refinance, even though you'll be getting a potentially a lower interest rate, depending on the time when you refinance and what the rates are at the time, you could potentially be getting a lower interest rate. However, now when you refinance, you're adding mortgage insurance back in. Depending on when you refinance, if the property has 20% equity in it when you refinance, you don't have to have mortgage insurance. It's not required for conventional financing. But after that 7 months, the likelihood of you having 20% equity in your property after closing with putting essentially 3% down, the chances are going to be slim to none. So again, to recap, we're talking, if you just joined, we are talking about a program that will allow for you to bring 1% down. It's a 3% conventional finance loan. We provide a 2% forgivable grant, which means you don't have to pay the grant back after you close, and you bring 1% as the buyer. Now, you do have the ability, if it helps you qualify for more, you do have the ability to bring 3% yourself, 2.9% yourself, and then we give the 2%. The all-in down payment can't exceed, it can't be 5% or better. So if you bring 2.9% and we bring 2%, that's 4.9% that is into the deal, and it could potentially help you qualify for a little bit more. Excuse me. In this program, again, you have to qualify. You have to be within 80% of the area median income. How do you find that out? There is going to be a link below after this in the show notes where we will have a link for you to find where your area median income is going to be in your area. It's going to be different if you live in California versus living in Tennessee. If you live in Georgia, it's going to be different than South Carolina. And if you live in two parts of Georgia, if you live in the Atlanta metro area and you decide to move to middle Georgia, the area median income is going to be different because the income levels are different in those areas. If you are new to my channel, or you're just joining, or you've watched this, do me a huge favor and hit the subscribe button. You will get a notification letting you know when me and my team go live. You will also have the ability to join our Facebook group. There'll be a link below to join our Facebook group, to go over to join the Facebook group so that you can get updates and notifications on when I'll go live in Facebook group. You have the ability to join the group. You've got the ability to ask questions in a group because I'm not live all the time, but I do get notifications when people ask questions in a group. You get to see feedback from other people in the group. And the goal here is to actually grow a community. Again, do me a huge favor, hit the thumbs up button as well, letting us know that we're giving good content. And we also want to make sure that you have the ability to grab our home buyer's guide. The home buyer's guide the link is going to be below. What you do is you join the mailing list and you will get the home buyer's guide sent to you free of charge. The home buyer's guide is a downloadable guide that will help you from start to finish in order to see help walk you through the process of home ownership from A to Z, as well as giving you steps on how to become a homeowner and things you need to look for as a homeowner. Again, if you're new to the channel, hit the subscribe button, give us a thumbs up. You will definitely get notifications. If you're just joining us, we're discussing a program, I call it down payment assistance program, where there's a 3% down payment requirement for conventional financing. We are going to require you to put down 1%. We will gift you a 2% forgivable grant, which will make up your 3% down payment requirement on a home. It has to be stick built. It cannot be investment property. You do not need to be a first-time home buyer. It cannot be multifamily. It cannot be used in conjunction with any other down payment assistance program. And again, it is available in 50 states. I can help you in 46 states. The 4 states that I don't have the ability to help you directly in are New York, Massachusetts, Rhode Island, and South Dakota. However, we can help you in other 46 states. The minimum down payment, again, is 1%. Credit score requirement is a 620 FICO score, which is a mortgage score. You have the ability to get up to 3% seller's assistance from the seller. So let's say on a $300,000 house, you ask the seller for 3% in seller's assistance or closing costs, whichever you refer to it or your team refers to it. That's up to $9,000 you have the ability to get to help you with your closing costs. So it's possible that you could be all in with very little money. So on $300,000 house, a 1% down payment is going to be $3,000. We're going to contribute 6 because your initial down payment is going to be 9. So we're going to give 6. You're going to bring 1%, which is $3,000. If you ask the seller for up to 3%, that's $9,000 of closing cost assistance that you could get. So on a $300,000 house, you could potentially get assistance for $14,000. 6 from us in a 2% grant, $6,000 in a grant of 2%, as well as 3% seller's assistance, which is $9,000. So that's an opportunity to get on a $300,000 house, $14,000 in closing cost assistance. Excuse me, $15,000. My math is off. $15,000 in assistance between your down payment and closing costs. Again, it is available in all 50 states. You do not have to be a first-time home buyer. There is no education requirement where you don't have to take any type of educational course to get the program. You don't have to take a home buyer's or have a home buyer cert to be a part of the course. There is no private mortgage insurance, which everyone typically asks, how do we get rid of mortgage insurance? The interest rate is going to be slightly higher above market rate. And the reason why is because when you don't have mortgage insurance, there's no protection for the lender in terms of if you were to lose the house. So what they do is they charge a higher interest rate to kind of compensate for the low down payment as well as no mortgage insurance. This product is available in 50 states. We can definitely help you. If you do not have the credit score needed, we can also help you work on the credit score. Now, I want to make sure I'm clear. There's a 620 credit score requirement. It is very rare that anyone with a 620 credit score qualifies for a conventional mortgage. You typically need to have assets. You have to have a low debt to income ratio, as well as, and when I say assets, that means money in the bank, some type of 401k, some type of investment, right? So you want to make sure that your score is high as possible. Conventional financing is very conservative. So you can't have any lates within the last 12 months. You have to be on time currently with your, you currently have to be on time with your car payments, mortgage payments. You can have multiple people on the loan as long as you stay within that area median income for your area between those two income. So if it's a husband and a wife that apply, the husband and the wife can't exceed that 80% of the area median income. So you definitely want to make sure you check into that. If you're unsure of what to do or what your credit score is, and you think that this would be a good program, I would suggest that you go ahead and apply. By applying, you get a game plan. You get to know whether you can qualify. And if this particular program doesn't work for you, we can help you get into it, or we can assist you with another program. So again, if you're just joining the live, do us a huge favor and give us a thumbs up. So we also have another offer. So I have taken some time and I've created a home buyer's journal. This home buyer's journal is 90 pages of information that will allow for you to journal your home buying process. It has everything that I could possibly think of to get in here, from specs of the house that you want, different features of the house that you want. Also, it has a budget in here. So if you don't have a budget or never seen a budget, there's a budget worksheet in here. There are notes that you can take on the house. There's notes that you can take in terms of a wish list. Notes that you can take in terms of a wish list for the house. There are also information in here. So once you close on the house, you can put in notes on important dates pertaining to your house payments. There's information that you can put in here for your like homeowner association, who the utilities are with. There's also space in here for once you have a current budget, there's space in here where you can put down what your revised budget is going to be. So this booklet right here goes along with your home buyer's guide to help you walk you through the process. The link for the home buyer's journal will be below. You can catch it on Amazon. You can get it on Amazon. Definitely do me a huge favor and take a look at it and see if it's something that will help you. So again, if you're just joining our live, we are discussing how to purchase a home with a 1% down payment. I'll also be taking questions pertaining to anything on home ownership that you have. So if you're listening now and you have questions, you can drop them in the chat. If you're watching the replay, you can drop them in the comments, and we're here to answer any questions you have about this particular program or home ownership. Again, with conventional financing, you have to, if you've currently owned a home, in most states, even though this is not a first-time home buyers program, if you've owned a home, you can't have home ownership within the last 3 years. And having home ownership within the last 3 years, you're considered a first-time home buyer. It depends on the state, though. But you definitely want to check into that if you are looking to purchase a home. Now, this program does not have an end date, so there's not no limit. There aren't particularly limited funds. You also don't have to worry about having to live in a certain area or a certain part of town to qualify for this particular program. You can live in city limits. You can live outside of city limits. The biggest criteria is that housing price, sales price, cannot exceed $350,000. Again, again, if you are interested in setting up a consultation with myself and my team, the link will be below. You can get on my calendar link, as well as if you have questions and you want to talk to me as well, then you can also reach out to me at Team Jefferson at summitfunding.net. That link will also be there. And we have our first question. I have a lot of credit cards. Do you think it's good to consolidate prior to purchasing a home? So that's a good question. I would say reach out to a lender or reach out to me and we can take a look at it, because what I found is some of these debt consolidation programs, they will tank your credit. I had a client reach out to me and they were referred to a debt consolidation company. Now, the person was paying on time up to that point. They just had a lot of debt. The debt consolidation company that they set up with did not make payments for them, which tanked their credit, which then allowed for them to get into debt consolidation. So what I would do is take a look at your credit cards and see which one has the lowest balance and also highest interest rate, and see how you can pay it off. So example, if you have a Capital One card and it has a $2,000 balance, but it also has a $75 a month payment, and then you have another credit card that has a $1,500 balance, however, it has a $100 a month payment, I would say pay off the $1,500 a month because it's a lower balance, as well as it has a higher payment. As you pay down those credit cards, I would not pay extra on each one. I would knock out the lowest one first And then once I got rid of that, I would take the overage of not having to pay that and pay down the next lowest credit card. So in terms of consolidation, I would not do that. I would look into seeing how I can get on a budget and pay more down on my lowest credit cards so I can do the snowball effect and pay down on the credit cards. Hopefully that answered your question, but that was a great question. So guys, if you have questions, drop them in the chat. If it pertains to credit card debt or bankruptcy, foreclosures, short sales, you're currently behind on credit cards, you got student loan issues, we're here to answer all of those questions if you have questions about them today. Again, if you're just joining the live, we are discussing how to put 1% down, at 1% as a down payment on a home. It's a program that we offer, and it's available in 50 states. I can help you in 46 states. You don't have to be a first-time home buyer. There is a 2% forgivable grant that we provide, and you have the ability to ask the seller for up to 3% of the sales price. Example again, on a $300,000 house, if you ask the seller for 3%, they can give you up to $9,000. Now, there's no guarantee that the seller will give you the 3% or the $9,000, but you do have the ability to ask for it. So let's say in a perfect world on a $300,000 house, we give you 2%, which is a $6,000 grant. And then the seller has the ability to give you up to 3%, which is $9,000. That's $15,000 total that you could potentially get and not have to bring out of the deal. I'm sure it's going to be a little bit more than $15,000 in terms of total money that's needed. However, you could potentially bring $3,000 as a down payment, and then your closing cost could be covered by a portion by the seller, and then the rest you bring yourself. So I think this is a great if you can qualify, I think it's a great product to get into a house with minimal, with a minimal down payment and minimal closing costs with total money out of pocket. Again, if you would like to do a consultation with me and my team, you can book a call here. The link is below. The link will be below, and also booking a call is streaming across the screen. You can also email me at teamjefferson@summitfunding.net. If we don't have any more questions, we can wrap up a little early, but I'm here for you if you have any questions. Again, guys, do me a huge favor and give us a thumbs up on this. If you have any questions, also comment below. And we have another question. Are you aware of the program that works with those with the vouchers to purchase a home? I've heard of it, NACA. So from my understanding, and I'm not well versed in NACA, but NACA, I heard that you can purchase a home with a Section 8 voucher, and that can pay for your mortgage. But the name of that program is NACA, N-A-C-A. NACA is a program that they lend their own funds, or the funds are actually given to them by Bank of America. So if you do have questions about that, again, I'm not well versed in it, but you can reach out to NACA and see. There's a lot to it from my understanding, but it is possible if you can hang in there. So that was a good question as well. Again, if you just joined the live and you are looking to purchase a home, you can ask your questions here. I also wanted to kind of discuss a little bit about the market at hand. So right now, we're currently seeing a market. We're currently seeing a market where sellers are helping contribute a little bit to buyers in terms of purchasing. They're willing to give a little bit of closing costs simply because there are not as many buyers in this market. A lot of people are saying, hey, I want to wait until the market crash or see if we can get a ton of foreclosures. The biggest thing is, and I'm sure you've heard it, is if the market crashes, it could potentially affect your ability to qualify. Also, if the market crashes, it could also cause for interest rates to increase. Housing prices will decrease, but the biggest thing is if you're in the market and you're sitting on the fence and you're trying to wait until interest rates decrease, you want to take a look at purchasing now. If you purchase now, and let's say this program, for instance, if you purchase now, you have a higher interest rate, you got into the market on a low barrier of entry of having to put certain funds out of pocket, then when you refinance, you can get a lower interest rate and your payment is where you potentially want it to be because you refinance, right? However, if you wait until interest rates drop, a couple of things are going to go away. The incentives that sellers and builders are giving are potentially going to go away. I'm not saying everybody's not going to give. However, the likelihood of getting something from a seller in terms of seller's assistance, like that 3% that I told you could potentially ask for, that could potentially go away, as well as now you'll have more competition. You could potentially have, instead of one or two offers being on the table, because there's a housing shortage and interest rates go down, you could potentially have 5 or 6 or maybe 10. So what people don't understand is when you have multiple offer situations, that increases values in housing or pricing. So like, for instance, if you found a home on 123 Main Street and you would only offer to go in and it was $300,000 and you offered 290, you could potentially buy, right, for 290. But if there's multiple offers and they want 300,000, then they're typically going to go for something called highest and best. Highest and best is where they want your best and highest offer that you're going to offer. They typically have a designated time where they want the highest and best. So it could be, within 24 hours of your offer. And then that's where bidding wars come in. So during that highest and best season, sometimes agents get an additional offer. So instead of it being 2 offers, you may have 3 offers, or it could be 4 offers. So again, I always advise people, they ask, when is the best time to apply? Now. Apply now to see if you qualify, or if you do qualify, how much you qualify for. And if you qualify for $600,000, that doesn't mean you have to spend $600,000. That just lets you know what your buying power is. Your buying power and your ability to afford that house to do 2 different things. I'm never going to push you to spend at the top of your price point if you're not comfortable. Again, guys, if you are just joining this live, you can drop your questions in the comment section. I'm here for, at least another 30 minutes, if you guys continue to have questions. I'm concerned about being upside down, so to speak, if I purchase a home due to the market, the value of the home's thoughts. Ty, that is a great point. If you purchase a home for $300,000 and the market decides to market values decrease, your home isn't worth $300,000, but that doesn't mean your mortgage payments change. You see what I'm saying? So if you still have the ability to qualify for the home and you still have the ability to pay, you continue to stay. There's going to be ebb and flows in a market. There's going to be times that you purchase a home for $200,000, and if the market crashes and it goes down to 150 and you stay in your house, let's say another 4 or 5 years, that 150 could then go back up to 250. So being upside down in the house, unless you don't plan on staying in your house long, that's the only time it would be an issue. If you're only looking to live there 1 or 2 years, that may be something to consider, right? But if you're looking to be there from a 5 to 7 year window, it's not going to matter, because you may not be able to move out of that house. Your payment's going to be the same, but if you move to a rental or sell the house because you want to go to a rental, that rental value or income, the rental amount isn't going to go down. So my thoughts are, when you buy a home, it is a long-term game. When I say long-term, you don't want to look at it for a 12 or 24 month increment. you want to look at 5 to 7 years and, use that as an investment. Those are my thoughts. So if you're upside down, don't worry about it. Just stay in the house, continue paying. It's ways to do it's ways to create forced equity by paying down on the balance, paying one extra payment a year. That's forced equity. If you have a higher payment and you go and refinance and you pay down, if your interest rate is lower and you pay the balance down and you pay that same payment you were paying before, except you take some of that payment and apply it to principal, that's paying it down as well. So that's my thoughts. But buying a home is a long-term game. It is not a get-rich-quick scheme. It's not an instant bank, but it does have the ability to create wealth for you and create some equity and allow for you to do other things if you stay in it for the long term. Hopefully that answers your question, Ty. Again, guys, we're here answering questions about home ownership. We're also talking about how to purchase a home with 1% down payment. We do have a program that you bring 1% down payment. We give you a 2% grant. Minimum credit score 620. Housing price cannot be over $350,000. You have to be within 80% of the area median income, as well as you don't have to be a first-time home buyer. Program is good in 50 states. I can help you in 46 directly. The other 4 states, I can refer you to a partner who will take great care of you. The 4 states that we are not licensed in currently are New York, Massachusetts, Rhode Island, and South Dakota. No problem. I appreciate you asking the questions. Again, guys, the link below for what the area median income in your area is going to be is below. And that's a good tool, right? That's a good tool to utilize and have. The reason why I say that is because if you're looking to do state bonds or different programs to have an area median income like USDA or something like that, that tool will allow for you to know, okay, I can qualify for these programs because my income is within 80% of the median income for my area. Miss Barber, yes, I do have realtor referrals in the areas in all 50 states. I know a ton of realtors. So if you need a realtor referral, I can definitely help you. Third degree burns. Is it financially beneficial to purchase a condo? Depends. Depends on you. Depends on the amenities. I can give you an example of like the Atlanta area. If people live downtown Atlanta and they have a condo, then they have the amenities of shopping, entertainment, and eating. If that's the life that they have, that they love, everything, is right there condensed in their area. However, in terms of resale value, I mean, condominiums they go up in value just like anything else. So the benefit is you don't have land. One of the downsides is, depending on you, you don't have land, but then you have other amenities. Some have parking garages, some have workout gyms, entertainment spaces. You don't have to worry about cutting grass. So depending on your situation, it could be beneficial to you. But I don't think buying a condo is a bad idea if you qualify for it. In comparison to a townhouse, townhouses are so difference between a condo and a townhouse. Condo is more like an apartment feel, right? A townhouse is a house feel, but it's connected. So you have some townhouses that have one car garage attached to it. Some of them go up higher. So there's, townhouse may have, I'm starting to see 3-level townhouses. Is one better than the other? I will say a big distinction is a townhouse can typically qualify for FHA and conventional financing. A condominium typically only qualifies for conventional financing. There is an opportunity for you to potentially get your specific condo approved for FHA. But I think a townhouse, when you resell it, allows for you to have a bigger pool of buyers because you can do FHA, VA, USDA, or conventional. But it just kind of all depends on what you're looking for. Biggest difference, one allows for you to have a yard space, one doesn't. Hopefully that answers your question. Again, guys, if you can do me a huge favor, give me a thumbs up on this. If you have any comments, questions, or concerns pertaining to any comments or questions pertaining to homeownership, ask them. No condo then. Yeah, I get it. I get it. You never know, third degree burns. You might have you might get to the point where you got you a house out in the country and then you got the condo in the city so you can hang out and chill. You never know. You might have that big money and have two houses in the same city. Again, guys, do me a huge favor. So if you're watching this live now or as a replay, I want some feedback from you. I want to know what specific topics have I not covered or would you like for me to expound on more, right? I do this channel to educate and help my community as well as the public. And there are topics that I think are prevalent and relevant to now, but I may not be answering your question or speaking on, excuse me, or speaking on your topic. If you guys could comment, if you're watching the replay, if you can comment below a topic that you'd like to hear, or if you want to, you can email me at teamjefferson@summitfunding.net and let me know what topic you'd like to hear. If you're watching it live and you want to hear about a specific topic that you would like for us to do a video on, also comment below. Okay. It says, I want to use my 401k to pay down debt so my debt to income ratio is good, but I may need to use it towards a down payment. What is a good route to take? So Ty, what I would do is I would apply. By applying, I can speak for me and what my team and I do. By applying, we can give you a game plan on what specific debts you need to pay down. Because my goal is always to help the client utilize the least amount of money to get them where they need to go. So then also by doing that, you'll have an idea of how much you qualify for, how much your down payment is going to be, a good idea of what your closing cost is going to be. So you're going to get a scope of how much money you need to bring to the table. I've seen people take money from their 401k or take money that they had saved to pay down debt so that they have a better debt to income ratio or what they think they can qualify, but they spent it on paying off the wrong things. So I would say apply, or if you have specific questions, book a call with me and we can kind of go into the widgets and kind of see, okay, what you may need to do. And then the next thing I'm going to tell you after we talk is to apply, because it gives me a better idea and a bigger picture on a grander scale. Some people take in consideration their student loan debts and take a higher payment than they have to carry, and some people don't factor it in. So I would say before you spend any money on anything, apply with a lender, me or someone, and see what you need to pay down, or your debt to income ratio may be intact already. What you think is high debt may not be high depending on what your income is. If you have been pre-approved for a loan, but afterwards went and purchased a vehicle, will that pre-approval be taken back? So let's say you qualify for, my favorite number right now is 300,000. Let's say you qualify for a $300,000 payment. I mean, a $300,000 loan, and you went out and purchased a car. and let's say that car payment is $600, that takes away $600 of your buying power. So do they take back your pre-approval? They don't, but they do lower. It does lower how much you could potentially purchase. Now, if you purchase a $600 car, a month car, have a $600 a month car payment, and you got a raise that could cover that, then it may offset it. But we don't take back per se the pre-approval. We just have to pre-approve you to give you another approval amount. Hopefully that answers. And guys, if you've been pre-approved, do your best not to buy anything. Don't buy a car. Don't buy any furniture for your house. Don't finance a cell phone or anything. Just, wait until after. Because the biggest thing is, after you purchase a home, all of those things I mentioned, you can always get after. With cars, the car dealer is going to find a way to get you into a home. A car dealer is going to find a way to get you into a car. And don't listen to the lie. I've had clients go and the car dealer say, oh, it's not going to affect your debt to income ratio. And that's not true. It will affect your debt to income ratio and how much you can qualify for. So if you can, try not to buy a car. If you're looking to purchase a home, wait until afterwards. I look forward to talking to you too, Ty. Miss Bickham, hopefully that answered your question. I know sometimes you may need a car, but hold on. Just hold on. And if you've already purchased a car and you've been pre-approved, I would just go back to the lender, let them know, because they're going to find out, say, hey, I purchased a car. I had no choice. Can you pre-approve me based off the new car payment? Hopefully that helped, guys. Again, if you're watching the replay in the beginning, go back to the beginning, or if you're just joining, we talked about how to purchase a home with a 1% down payment. Product is good in 50 states. Me and my team can help you in 46. Minimum credit score is 6%. You also have a potential to get up to, if you're on a $300,000 house, you have potential to get $15,000 in assistance, a 2% grant, and then asking the seller to contribute up to 3% of the sales price, which is the max amount they can contribute out of pocket. I do want to also discuss, when you are looking to purchase, you want to make sure you have the right team. Your team consists of a lender that's knowledgeable, an experienced, knowledgeable realtor, and then we can introduce you to the rest of your team, like attorneys' offices or title companies, depending on the state you're in, as well as home inspectors. The importance of having a good team could be the difference between you putting a bunch of offers in on property and not putting a bunch of offers in. Your realtor has to have the ability to negotiate contracts, and negotiate contracts is not getting into a bickering match with the listing agent. It is advising you on the right price to make an offer on, depending upon your situation and the situation at hand. Your realtor should know whether or not there's multiple offers coming in on a property. That's something they could potentially ask the seller's agent. And then you want them to be able to partner with your loan officer so that together and collectively, they can help you win the bid. A lot of times there are just certain small tweaks or questions that realtors need to ask, as well as your lender. Your lender has to be able to be an advisor and help you understand the numbers, see the numbers, and let you know the difference, as well as them communicating effectively with your buyer's agent who can help you, and with them as a team, and having a knowledgeable team that works together could get you into a house faster or not. Is there a difference between a realtor and a real estate agent? And actually is. A realtor is someone who is licensed, and they pay dues to something called the National Association of Realtors. The National Association of Realtors is a real estate organization which has the word realtor trademark. A real estate agent is a person who has their license, but they are not a part of the National Association of Realtors. Sometimes the words are used one and the same or synonymously, however, or interchangeably. But a realtor, you can be a realtor and a real estate agent, but if you're not a part of the National Association of Real Estate, you can't consider yourself or say that you're a realtor. No problem. Hopefully that answers your question. Again, guys, if you're just joining or if you haven't subscribed and you've been watching me for a while, hit the notification button. Hitting the notification button allows for you to know when I'm going live. My goal is to go live 1 or 2 Thursdays. It just depends on the time, but I will always post and notify you in my community, in my Facebook page, and through the newsletter of when I plan on going live. And ask me some topics, guys. If you got any questions pertaining to home ownership, ask away. If you're out there and I see we have 20 people watching, if you have any questions or comments, just definitely let me know. If you're here and I see that 20 people are watching, when I log off, I need to see at least 20 thumbs up. If you have not given me the thumbs up, give me the thumbs up. Let's see, we have another question. Is it a good Is it a good idea to get a secured or unsecured card in order to rebuild credit as well as getting a trade line? I only have non-traditional trade lines. A secured credit card is not a bad idea. The reason why you want to potentially get a secured credit card is to help establish credit. What we run into is some people get secured credit cards or unsecured credit cards, and they start to create more debt. The goal is to get a secured credit card or unsecured credit card to help you increase your credit score, right? I would even venture to say before you got the secured credit card, reach out to a lender. Like my team and I have the ability to see what your credit score is now. And also we can kind of forecast what it will take to get your score to where we need for you to qualify. Now, if you don't have a credit score and you don't have any trade lines, then we could potentially help you with an FHA no credit score loan. We can take three of those non-traditional trade lines and help them establish you credit. There's still a 3.5% down payment requirement. And as contrary to what people say, the interest rates are not double or way higher, because the thing is, interest rates are based off the market and also based off your ability to repay. If you have no credit and no credit score, you don't have any bills that report on your credit. So that makes you less of a risk. There are a couple additional hoops you have to jump through. But for the most part, if you have 3 non-traditional credit lines that you have been making payments on for 12 months, we can use that to help you establish credit. You're not going to have a super high interest rate like people think. Your mortgage insurance is not going to be higher than everybody else's. You're not going to have to put down a larger down payment. So that may be an option as well. And if not, if applying and getting a secure credit card will help your score and help your terms better, then that works as well. But yeah, reach out to me because I have access to some secure credit cards where you don't pull credit. It's just a soft pull as opposed to a hard. And I have seen people go to bigger banks and they pull credit and get denied for a secure credit card, which makes no sense because you're putting down your own money. But I have seen people not be able to get secure credit cards. And you also want a secure credit card that's going to report to all 3 credit agencies. I look forward to helping you buy in 6 to 8 months. But if you have any questions, schedule an appointment with me and we can talk about it a little bit more in depth and kind of put together a game plan for you. Again, guys, I appreciate your questions. If you are out there in YouTube land and you have questions pertaining to home ownership, drop them below. I'm here, guys. In the meantime, the Homeownership Journal. The Homeownership Journal, again, will allow for you to journal your process of home ownership. There's specs about the house. The link is below. Specs more about the house. Your wish list. Wish list on the house. Budget. The link will be below for you to get it. Also, do me a huge favor. I'm trying to grow my Facebook group. I want to grow my Facebook group because I want to grow a community. I don't care if you aren't looking to buy for 2 years. Join the Facebook group, get in on it. We're going to start to have theme days as it grows. I'm going to pick a specific day and I'm going to go live in a group. Matter of fact, I'm actually I'm going to. If I can get 10 more people to join the group, I'll go live and then I'll do a giveaway of this book free of charge. So if I can get 10 people to help me grow my group, if you're already in a first-time home buyers group, join mine too. You might get some different information. But yeah, the goal is to build a community, to build home ownership, to push home ownership. So you can get my home buyers guide, which is free. The link will be below. All you have to do is give me your email, your name and your email, and it's instantly downloadable. And it also can go directly to your email address. That newsletter I send out on a weekly basis, informative information about the real estate market. And then we also send out about when we're going to go live on YouTube. Facebook group. On the Facebook group, we also have, we're going to be going live and specifically in Facebook in that group to answer questions. The goal is to have theme days. We're also going to have where we'll have some giveaways. So I definitely would like to see you guys help me grow that group. The Facebook Live group will be below. The link for the home buyers guide is below. And the link is going to be below for the journal. It says I'm not on Facebook. Do you go live on IG and are you building a community on IG as well? So yeah, that's a good question. I am going to start going live on Instagram as well. I post on Instagram more than anything. I post on Instagram at least 5 days a week. So yeah, follow me on Instagram. My Instagram handle is @thepeoplesLender. My Instagram community is actually larger than both Facebook and YouTube. So yeah, I'll definitely do it. I'm going to start going live. Again, my goal is to create community on social media. I've been able to help a lot of people recently. In the last year, I've been able to help a lot of people from social media be able to purchase who did not think that they could buy. So again, if you want to follow me on Instagram, I go live, I do reels, I do funny videos. I try to edutain you sometimes. But yeah, you can follow me on there as well. You can join my Facebook group. You can join my Facebook group if you're on Facebook. Make sure you follow me on here as well. Again, if you have any specific questions, I'll probably take a few more questions and then wrap it up. But for sure, and if you have topics that you want to hear, like my topic on bank statement loans and non-QM mortgages was where someone had sent me the information and said, hey, I want to know more about this. Purchasing a home as a single mother, that topic came from a couple of young ladies asking me, hey, can I buy a home? I'm a single mother. The topic on Am I too old to purchase? That came from people asking me, hey, do I have the ability to purchase? So I want to give you guys the topics that you want to hear about and want to learn about. I'm also going to be expanding on topics, getting a little bit into the investing side, because I think owning a home is your first investment, but using the equity from your home to purchase more investment properties is even better. Um, Again, guys, I appreciate you for joining me tonight. If you guys have any questions and you're watching the replay, you can leave them in the comment section. I check them. If you're live, I can take one or two more questions. And if you don't have any more questions, we're going to wrap it up here soon. But please help me grow. I'm begging you. I need 10 more people in my Facebook group. Please join the Facebook group. Follow me on Instagram at The People's Lender. If you're not subscribed to this channel, subscribe to this channel. Also, if this is your first time here and you haven't watched any of my videos, go back and take a look at my catalog. We've got quite a few videos on different aspects of home ownership, from FHA to VA to USDA to conventional loans, down payment assistance programs, the different ways student loans affect it. There's a library of content that I believe is bar none. And it can, if you just watch what I've provided for you, I truly believe that you can purchase a home based off all the information that I've provided. Again, guys, I appreciate you for joining me tonight. If we don't have any further questions, I look forward to seeing you next week. And if you do have questions afterwards, reach out to me, book a call, and see how you become a homeowner. Thank you and have a great night.